Welcome to Friday Takeaway. This week, in the first week of 2019, I analysed dotCom and its counterpart Inari Amertron, two tech companies with very different starts to 2019. But first, Apple. In what is normally the most important period of its fiscal year, the world's most valuable company shocked Wall Street by issuing an extremely rare revenue warning, which has come just weeks after it rebutted concerns of weak iPhone demand, its biggest revenue contributor with some 60% of sales. We did not foresee the magnitude of the economic deceleration, particularly in Greater China, Apple Chief Executive Tim Cook said, adding that almost all of the disappointment could be attributed to the economic slowdown in China, which has led to lower demand for iPhones, Macs and iPads. Over at Tesla, there are some worries too, with Elon Musk's electric car company revealing sales figures that fail to meet expectations, particularly of its mass-market Model 3 sedan. At 90,700 units in total, deliveries were over 3 times what they were a year earlier, but still lower than the 92,000 vehicles expected by analysts. Tesla shares predictably fell sharply following the announcement, reflecting concerns about the prospects for that Model 3 sedan, which is designed to be the world's first mass-market electric vehicle. Didi, choosing the Chinese ride-hailing app, has branched out into financial services as new regulations threaten to cut the number of its drivers. Didi's new product lineup includes car insurance, personal loans and a crowd-funded medical insurance product, coming of course after a difficult half-year following the murder of 2 passengers on its platform in 2018. With this move now, of course, Didi competes with established fintech players like Alibaba's Ant Financial and Tencent's WeSure and WeBank platforms. New year, new rules. The smoking ban in public eateries came into force on January the 1st, and there's already been 1,500 summons already been issued. Under the new law, 9 types of eateries have been gazetted as no smoking venues, and that includes open-air eateries, shop lots, restaurants, food trucks and hawker stalls. And after the 6-month notice period, those caught smoking in prohibited areas would be fined up to 10,000 ringgit or face 2 years of jail, while establishments found to have allowed customers to light up would be fined up to 2,500 ringgit. In this week's This or That, I look at 2 technology stocks who have had very different starts to the year. On the one hand, dotCom, and that's a telco which specializes in fiber connectivity, has had a very steady start to 2019. On the other hand, Inari Amertron, a semiconductor assembly and test services company and one-time investor darling, that's had a torrid beginning. So let's look closer. dotCom is a telco that offers fixed line and enterprise services including broadband and wireless data, voice and data center services, where the majority of their revenue comes from. Time says it divides its business into 4 segments: data, data center, voice and others. In its most recent third quarter, core earnings surged by 121% year-on-year, due to what Time said was strong growth in recurring revenues and cost management. 9-month core earnings rose by 50%, driven by double-digit growth in data and data center recurring revenues. Now, this strong performance clearly driven by increasing numbers of Malaysians using the web to surf American and other international sites. And any concerns that there will be short-term margin compression in its Time Fiber retail segment would be mitigated by increasing the subscriber base by targeting more than 1 million premises by 2020, according to its management. Key among the potential headwinds for Time would be the government's push to drive down internet costs, while at the same time upping internet speeds, developments of which are affecting the entire sector. Plus, Time's retail expansion was slower than expected in the third quarter, possibly due to a wait-and-see approach by customers expectant of cheaper packages from local telco players. Now, to respond to this, Time offered a competitively priced new fiber home broadband plan, by which it says may result in reduced average user revenues and short-term margin compression. Of the 8 analysts who cover dotCom, according to Bursa Marketplace, 2 are a strong buy, 5 are a buy, 1 is a hold, and none recommend a reduce or sell. The consensus target price for dotCom is $9.75, which means intrepid investors stand to enjoy a potential 20% upside from current levels if all goes well. Inari Amatron. Inari offers semiconductor assembly and test services businesses with business segments that include an electronic manufacturing services segment and original design manufacturing of electronic test and measurement equipment. They've got offices in Malaysia, Singapore, China, Philippines and Taiwan, though Singapore accounts for most of their total revenue. Inari has been badly hit by an unexpected revenue warning from Apple, which earlier this week said it badly misjudged the health of the China market and that sales of its iPhones, which Inari serves, would be badly impacted. Analysts say Inari derives nearly half its revenue from its radio frequency RF division, which mainly serves the smartphone market, particularly Apple's supply chain. Now, while largely involved in the production of radio frequency parts for Apple, Inari has said in the past it intends to diversify its revenue streams, including into producing LEDs for digital billboards. Analysts also like the progress Inari has made with expanding its production lines and adopting new products and new projects to diversify its customer and product concentration risk, which could well offer double-digit earnings growth prospects and strong margins. Of the 17 analysts who cover Inari on Bursa Marketplace's website, 4 are a strong buy, 8 are a buy, 4 are a hold, 1 says reduce, none say sell. The consensus target price is $2.07 for Inari, which therefore means intrepid investors as well stand to enjoy a hefty 61% upside from current levels. But note, however, that these calls were made prior to Apple's forecast warnings.